Hi guys, how are we doing? Abstract Tokenization here. I'm going to tell you a little bit about what we're doing, and then hopefully we'll have some time at the end for some questions. So who we are. Abstract Tokenization is a financial technology company developing an end-to-end regulatory compliant tokenization as a service platform, specifically for commercial real estate sponsors and investors that helps automate the technical, legal, and operational functions of a security token offering for real estate, reducing the cost and time to raise capital. Tokenization is the process of converting traditionally private illiquid securities into tradable digital securities involving smart contracts and regulatory compliant token structuring. So the current environment. Right now, out of the 280 trillion in total global real estates, less than 1.4 trillion was exchanged last year, which is less than 0.5% of liquidity. Abstract's looking to target the commercial real estate investable high quality market with 19 trillion globally and 8 trillion in the US. New York Stock Exchange parent company ICE and Fidelity Investments have both launched digital asset custody and trading services. ICE actually just announced this morning that they'll be launching Bitcoin futures on their new digital asset trading platform backed on December 12th, 2018. Some real world use cases for real estate tokenization. Just this month, the St. Regis Aspen Hotel closed an $18 million tokenization. The ownership of a $30 million Manhattan luxury condo complex was just tokenized and converted into digital securities earlier this month. Additionally, a European private equity real estate fund, Peak Partners, has now announced the offering of a digital security backed by their fund. So we're starting to see some major folks step into it, as well as iconic properties. Additionally, in 2017, prop tech investments in startups have increased from 4.2 billion up to 12.6 billion in 2017. So why should you care? What are the benefits of tokenized securities, also called digital assets? Number one is liquidity. So economists have quantified the cost of illiquidity at 15 to 30% of an asset's value. That liquidity premium can be unlocked by bridging the gap to the other 99% of global investors through offerings such as Reg A Plus and Reg S, and the liquidity gap to securities laws compliant security token trading platforms, ATSs, coming online over the next few months, ranging from traditional secondary platforms such as ICE's backed and the Canadian Stock Exchange to others like Open Finance Network and T0, specifically built to trade security tokens. Many of the traditional utility token cryptocurrency exchanges, such as Bitrex, Binance, and Coinbase, are also in the process of becoming registered BDs and ATSs so they can compliantly support security token trading. Tokenized securities also have a lot more control. Investors can trade or transfer their money 24/7 rather than just on market hours at lower costs and 30-minute settlement versus 3 days or 2 or 3 days. Access, we're reducing the minimum investment and opening up the global capital pool of billions of accredited and non-accredited investors around the world who can now invest. Not to mention the increased efficiency both on the primary and the servicing side, as well as transparency. A digitally recorded immutable data trail of auditable information is much more secure than offline records that can be tampered with. Finally, what does this mean? It means the impact of all these things causes values to rise, both from unlocking liquidity premium as well as from tapping into new global markets for additional investor demand. So how does it work? So our goal has been to simplify the process for commercial real estate sponsors and take care of all the technical and other functions that is not their core business. So our end-to-end process operates with security laws, compliant smart contracts and token structuring, distributed ledger technology, comprehensive due diligence and service provider marketplace, investor relations with real-time cap table and automated reporting and distribution processing. So initial tokens are minted. Once bad actor checks and background checks have been passed, the initial tokens are minted and distributed, with ownership being recorded on the blockchain's distributed ledger. Whether that be a public blockchain like Ethereum or EOS, or private permission ledger like Quorum or Corda. regulatory compliance is built into each token. Additionally, Abstract plans to facilitate secondary market trading across multiple platforms for real estate-backed security tokens. Our integrated ecosystem. So we're building a true end-to-end marketplace that pulls in all the necessary components for a successful commercial real estate offering, including providers such as SEC qualified custodians and trustees and transfer agents on the digital asset side, digital wallets and cold token storage, registered broker dealers, financial auditors, lease auditors, property inspectors, commercial real estate attorneys, security attorneys, obviously KYC, AML, providers and accredited investor verification services, smart contract security auditors, title companies, credit report providers, and other real estate service providers and due diligence folks. So the team. We started Abstract at ETH Denver Hackathon earlier this year. And our founding team, thank you. And our founding team brings experience and expertise from both the crypto and blockchain world, as well as from operating in the traditional commercial real estate world, institutional investing and financial industry, and a background successfully scaling technology companies. Our co-founding CTO recently sold his last company. Our head of product and marketing has managed 19 international markets. I've forged partnerships with billion-dollar enterprise clients and partners like Ticketmaster, ACG, even LA Staples Center, SF Giants. And our last co-founder has been the COO and CIO of American Capital Group, which has done several $billion in commercial real estate development. And he's been in commercial real estate his entire career. So collectively, as a founding team, we've raised $200 million in equity for CRE deals, 8 figures of traditional VC and angel capital, acquired and managed customers, billion-dollar organizations, built and scaled technology teams, and been involved in over $1.5 billion of developments, acquisitions, dispositions, and refinances. We're also really proud of the advisors that we've brought on, including the original president of Adapar, senior vice president of CBRE, co-founding managing partner of Cephas Partners, private equity real estate firm, who works primarily with Blackstone, real estate strategist at Columbia Pacific Advisors, and lastly, the head of corporate development at Bitrex. So where are we focused? Initially, our focus is on the largest and most underserved space in commercial real estate, which is the middle market segment. They have the least efficient transaction processes of commercial real estate, and they account for about 70% of the market, despite a lack of analyst coverage. So the middle market is defined as sales transactions under 25 million and leases under 50,000 square feet. Also, we're targeting commercial real estate sponsors, mid-level regional shops with 1 to 2 billion AUM as the early adopters. We already have our first customer on board for when the platform launches, American Capital Group. And we also have identified the target spaces for investors, both U.S. and international investor focus, but we've been finding a particularly strong appetite for tokenized U.S. commercial real estate coming from Asian real estate investors and funds, along with some other international countries like Germany and UK. Middle market deals are generally conducted offline, and the prospective buyer pool is large and diverse, with a lot of buyers from out of the state or country, making it hard to identify these qualified buyers through traditional methods alone. We're able to take care of that. In terms of the revenue lines, initially primary issuance fees from our tokenization and compliant token structuring technology only. So a great example here would be to convert existing ownership of a commercial real estate asset into a tokenized security structure of ownership. As we evolve, we'll be working with broker-dealers and also acting in capacity as a wholesaler and managing broker-dealer down the line to help facilitate the capital raise piece as well as the technical piece. Additionally, we'll be charging investor servicing fees for automated compliance, reporting, and distribution processing. So no longer will sponsors need to write a check out manually, stuff it in an envelope, and mail it. Sponsors are now going to be able to have that all taken care of them by us in an automated fashion. They'll be able to see real time their cap table, exactly who owns how many tokens of their offering, and along with that, all the required reporting that goes into that from the tax and regulatory standpoint. We plan to white label license our product to broker dealers, commercial brokers, and large sponsors. And we'll be charging a fee for the API calls for the tokenization and servicing modules. And then lastly, we plan to facilitate the secondary market trading of CRE security tokens, aggregating across a number of secondary security token trading platforms going live starting the next couple months and all the way through next year. We expect there will be 20 plus, many of them international. And we'll be aggregating the different pricing and commission structure and so forth so our customers can choose between which platform they want to exchange their compliant security tokens on. We're launching our own abstract security token offering, pre-sale starting next month with eToro Capital acting as our broker-dealer. And I would encourage all of you guys to check it out at abstract-sto.com. And there'll be more details there on both our offering, the token structuring, as well as more on our platform. I'd love to open it up if there's any questions from anyone to answer any questions or provide a little bit more insight into the space, if there are any. Go ahead.
Do you guys work with one of the existing secure token standards or? Hold on. Wait. Switch. Okay. Yeah. Do you guys work with some of the existing secure token standards, or are you guys proposing your own?
It's a great question. So we've evaluated all of them from ERC 1400 and 1411 to ST20 to CAT securities to the open finance networks and the secondaries. We were just talking about the director at T0 about their framework, token structuring. They're all fairly similar with some small nuances, but essentially they're all restricting the transfer and trading based off of security laws. So 506C, Reg D in the US, we've got 12 months built in. We've got whitelisted investors, so you're only selling to accredited investors. Now with Reg S internationally, it's a lot less so. And so for us, we basically have taken all those standards and made sure that the structuring we're doing is compliant with all of them in the secondary exchanges. So like Open Finance Network, we spent a lot, I think their protocol is called S3, is their structuring. And ultimately, the goal is you want to make sure the token is legally compliant and able to trade on these secondary security token exchanges. And so to that end, that's what we've done.
Got it. And from the regulatory perspective, how are investors protected? Are they viewed as real estate investors in general? Or if I buy a secure token that represents a real estate asset and something goes wrong, am I protected as a general investor? Would be in a regular situation, or there is some?
That's a great question. And that's what we're excited about. We come from these more traditional worlds. I was at Merrill Lynch for almost 9 years. And so for us, it's very important to build in, number one, investor rights. Number two, asset backing. So whether it's our own token for our company that's backed by our company, or the ones we're doing for our customer sponsors, which will be backed by the actual real estate, underlying real estate, as a fractionalized piece of ownership of that. And then investor rights are built in, as well as investor protections. And so we have redundancy built in terms of ownership records. So if something does happen where it's lost, we actually have the actual records we're backing up onto our servers and along with the private data, so it's not out there on a public blockchain. And all those pieces are able to be pulled up by our system and looked at if there's ever investor concerns. And one of the other pieces we're building in is investor servicing and doing it in such a way that it's all automated. So if you're an international investor, once we receive your W-9, your distribution goes out to you. You're not even going to be able to invest in the tokens of our underlying offerings unless we do the KYC, AML on you, and have done plenty of compliance to protect everyone that way.
So pretty much you're building the system similar to what Polymath did for like general securities, but you're concentrating on real estate and building out some framework to specifically
with some additional specifications that are around real estate. So any commercial real estate sale has about 20 some providers and due diligence folks involved. some of the folks I mentioned, like lease auditors and those kind of things. And so we're building that into our marketplace. So it's a one-stop shop specifically for commercial real estate sponsors, specifically for their needs that they have and their specific business.
I got it. Thank you.
Yeah, definitely. Any other questions, guys? All right, well, thank you for the time.